All right, guys, let's get an update for what has been happening here today. So we can see here we've had a trend change signal and we have broken back up into the parallel channel. This channel running back from middle of May, which is hold we've obviously broken out of, and now we've gone back into. I do want to say here that we should be a little bit cautious when we look at the QQQ. This is tech, right? This is your most valuable player or your quarterback, however you want to refer to it, and it's not back inside its parallel channel there. It's not saying it can't get in there, but caution is advised, um, especially when we look here, as well at the long term. Let me switch this off, make it a bit cleaner. When we look at the long term parallel, which we've been trading in since COVID low, tagged it here at the top, tagged it at the bottom, tagged it again, tagged it again. This is why we need to be cautious, because we broke out above it, we came back in, tried again. We're going to get another attempt here, and we'll see how that plays out. Looking at the VIX, we're on a confirmed sell signal. Great news, obviously. Currently, we are at a higher low. Let's see if we can get down there tomorrow or next day. That'll obviously be good news. When we look over at NVIDIA, same as the Qs, I would say NVIDIA is your most valuable player here, and we're not having them play very well yet, which is concerning. We come over to the advanced market structure. We did get a buy signal, I should say, here on the daily chart, which was good. That was back on Monday. So that would have been your entry on Monday. Caution though, caution, because this looks like this, a lot like this, a hell of a lot. So caution needs to be applied. Our bellwether indicator, we did get a strong buy signal. Again, caution, we had a strong buy back here too, and we got a bit of a bounce, but yeah. So caution is what needs to be said here. You need caution. Little update for guys using the buy and sell signal indicator. Have made some pretty cool changes. I'll turn the trend one on so we can see this as well. We switch over to a 2-hour chart. I've differentiated some signals into very strong buy or very strong sell. So here we can see these ones. Now, these are greater than a strong sell, which is this one. These are even bigger. So based on the parabolic SAR and RSI is how we're determining that. So these are very strong, and as you can see, they played out. They were very strong, warning that this is over. So if we zoom in here, we got the first very strong sell, second very strong sell. We should have been getting out at that point, and then obviously the last one. And then down here you got a very strong buy, and then obviously played out quite well if you play them properly. So we've got now buy signal, sell signal, strong buy, strong sell, and very strong buy, very strong sell. So helping you better differentiate the difference between them and make your trading a little bit better. When we have a look at the dollar, we're on a sell signal today. If we go back to, let's say, 2-hour time frame, we can obviously see we've got a trend change, a bit of a pop there. Now back onto the sell. This is bullish for gold. So gold here on the 12-hour time frame, we are now trading within this parallel, obviously, and we've got some resistance coming up. If we break through here and we break through the 50% range on the parallel, this is very, very, very bullish. Because this is a rising wedge as well, I'm inclined to say we're going to break through And that's why I'm very bullish on gold here. When we look at our sentiment as well for gold, it's not going to work on a 12-hour time frame. Let's go back to the daily. We have sentiment of heavy buying. So people are buying into this. So that is bullish. Palladium, same deal, 12-hour time frame. We've got a good buy signal here. Not a strong buy signal, but it is going to follow gold's lead. When gold breaks out, Palladium is going to do it. Palladium's like that ADHD version of gold. It gives you bigger, better returns. So very good there play for Palladium. Let's see how that plays out, and we'll go from there. All right, guys, this is our fib level chart, giving us Fibonacci levels. I'll just give you a quick rundown of how fib levels can be drawn. So what we've done here for predicting a 100% measured move is we go off the low. You got to get it on there first. I'll just roughly tag it. And so you get your 100% measured move area. So 2020 low, 21 high, October 22 low, 100% measured move area, 608.85. And would you look at that? Lines up perfectly with the top of wave 3. Okay, I've drawn these earlier here, so it saves me having to draw them again. We get the low, high of 23, and the low of October 23, 100% measured move area. And would you look at that? Calls it out perfectly. Our next one, low, high, low. We get that same 100% measured move area for Feb 25, and we tag it perfectly. The next fib level, low, high, low, and we get the 100% measured move area of 684.08, and we are toying with it right now. Now, technically, it doesn't always have to play out this way, but because we're in the 5-wave pattern, we do have one more fib level, which is from the start of wave 2 to the top of wave 3 to the bottom of wave 4, and that puts us at 746.92 for 100% measured move. Now, I don't think we're going to achieve that yet, but that's where the level is. So interesting that we are respecting these fib levels to perfection. 100% measured move on first wave, predicting here. Second wave, 100% measured move, accuracy, bang. Accuracy, bang, accuracy, bang. Every time, 100% measured move. And that's why this is getting quite dangerous at the moment. So I wanted to take you guys through some hypothetical trades. Obviously, it's only hypothetical, but let's use our wits about us. The indicators weren't built at the start of the year. I only built them a couple of weeks ago. But if we were to hypothetically trade year to date, so we're looking at here, January, start of January, year to date, what would we have done and why? Well, firstly, based on the fib levels, we wouldn't have touched any of this garbage. But if you did, your entry would obviously be here. You would then have a small loss when it gaps down on you here. You would go in again here, gap out here. So I have noted all of these trades down, but I'm going to work you through what would have happened, okay? Here, I would not have taken this trade. We're still in a confirmed downtrend. It's an ABC correction. So I haven't included this trade, although that trade with a stop loss may have been profitable. Anyway, what I've done for working out this is if we're to enter halfway through any trend change candle, because obviously it's going to trigger halfway, and then any particular reason to get out and a reason to get back in is what I've done. I've worked all of these particular trades out across all of them here, and then including this is the last trade I took and then got out here. I did actually take this trade. My indicators were working at this point, so I was using them. Year to date across the Qs, including compounding, this worked out to be 32.9%. So we have to understand why we're going to trade it. People have been asking, give me reasons to how to use the indicator, how to trade. Well, we have a confirmed trend change when we get the signal. So obviously that's bullish. Then we have parabolic shift in the market. And these are strong sell signals. Not the very strong, but they're strong enough to say like, hey, this is trouble. And at this point, this could have rolled over. We obviously didn't know what was going to happen going up here. But this was when it told you to get out, and then you avoided the next two candles of down. I mean, this thing could have continued down at this point. And a lot of people at this stage did think it was going to continue down. Then obviously it's come back up, it's stabilized. You've got an entry signal there to go again. Now, because the trend did stay green, you could have entered in on one of these two bars and thought it's all okay. But if you wanted to play it safe, you could have waited till then. And that's what I've done when I've worked out this gain. And then again, we've got another reason to get out. And again, we could have rolled over here. And a lot of people did think we would, but we didn't. It did start to, if you have a look at those ones. But again, all right, trend change. I mean, not trend change, a signal entry, go again. So working across the chart, you can see how this works out, why to get in, why to get out. Very cool signal here. We've got this signal here saying, hey, no good, get out. And then the next day you have a big gap down. So saves you from that gap. Then you've got the trend up change. Again, use some wits about you. Hey, we're tagging the top of the parallel channel. We've been tagging it. When we tag, we bounce. We're bouncing up, but we're bouncing. So you can use your wits about you as well as the indicators. It's not just the indicators. You can't auto trade anything and win, but this gives you a higher probability of being successful. So again, when you bounce off the bottom here of the parallel channel, that's an indication right there. Like, hey, this is holding support. Obviously, that was the first confirmation of where the channel was, but that we are holding support there. You've got a confirmed bounce. You can continue to go. You then got the signal to go in. You got another signal here to get out. Again, day before it gaps down on you. So it's telling you to get out. Now you can weather all this if you want to, or you can get out. It just depends how you're feeling at that particular point in time. But that signal, this sell carried through to here. Obviously price went higher, but if we have a look at your bearish divergence on the RSI, which carried over, and this is your plotted SAR line, still saying you're valid. It's no good. It's still on a sell, until we flip. So yeah, it melted up, but not by much, and had all the risk. So if you trusted your signal, you just would have stayed out of here and not jump back in, because you never got a signal to re-enter. Here, this was a good, strong signal. I jumped in on this one, and then it was up here where I was like, I don't know what's going to happen the next day. I jumped out on this candle here. I think I jumped out at like 6:33 or 34 or something. I know it was on the wick somewhere. And then obviously next day a little bit higher. But, we had reasons to get out that I was seeing at this point with, I think it was on the divergence, here. So, I mean, we've made a higher high. It hasn't calculated it across because it's worked out that one, but we've made a higher high here with a lower RSI. So we've got that divergence across there telling me, from that experience, like, hey, this is no good. You got to get out here. And then obviously shortly after confirmed. And then, like I said, when we go to our 2 hour, because obviously you're going to go to shorter time frames, we get, very strong signal saying get the hell out, and another very strong signal saying get the hell out. So, watch your different time frames, and then you can work out what to do. So that's just a couple of updates, some updates I've made to that particular indicator, how best to use it. If you guys have got any questions or anything, just hit me up and I'm happy to help you. All right. Thanks, guys. Bye.